Next. Okay, so yesterday we were talking about 5 steps in the recording process, right? What are the 5 steps? We said the documentation of the transaction, the invoice for buying the car, the bank statement which shows that funds moved out of our company, the check or something. Then based on that, we will pass the journal entry, we will do a transaction analysis. We all know how to do transaction analysis now. We have spent 4 or 5 sessions already. So, based on transaction analysis, we will pass the journal entry, then we will prepare the ledger account, then we will prepare the trial balance, and then we will prepare the financial statement, which is profit and loss account, balance sheet and cash flow statement. So, cash flow statement we have not yet come till now. Till now we have not discussed cash flow, but let us ignore that. At least profit and loss account and balance sheet to banao, right? And now just reminding you, on day 1 we were saying assets equal to liabilities plus equity. We said anything that belongs to business belongs either to outsiders or to insiders. If it belongs to outsiders, it is called what? Liability. If it belongs to insiders, it is called equity. Then in equity we had 2 components. One was the paid in capital. Paid in is a US term. In India we call it paid up capital or share capital basically. Share capital or paid up capital. And we already know the difference: authorized, subscribed, issued, paid up. We already know that from yesterday. And then we have the retained earnings. So, we also said yesterday that assets, what was the rule? We only need to remember this part. This part automatically follows and this part automatically follows. But this slide is the most important slide and the only slide. This slide is the most important slide and the only slide that you will need to pass journal entries. So, if you decide to talk to your friends who are BCom or BBA, they will confuse you. Trust me, they will try to show their knowledge कि मैं बहुत महान हूँ, you know, ये तो personal account है, ये nominal account है और ये real account है, and the entry rules are this, you know, you will do debits all expenses and credit all incomes and you will debit all assets and credit all liabilities. वो ज्ञान देंगे खुद का. Don't listen to their ज्ञान, right? ठीक है ना? You don't need anything else. So, what was the rule? We said assets are debit, increase in assets is debit and decrease in assets is credit. And assets is on one side, liabilities and equity are on the other side. From common sense, we know that ठीक है, so this must be the ulta or reverse, right? So, if assets are debit, because then liabilities are credit, increase in liabilities is credit and decrease is debit. Paid up capital is credit, increase is credit and decrease is debit. Retained earnings is credit, increase is credit, decrease is debit. So, first line is clear to all, and this is the only opening rule that we are imposing. Everything else follows from this rule. मैं बोल रहा हूँ, if I am passing on the left side and if you are coming from that direction, you will pass on this side, otherwise there will be accident. 700 years back it was decided, when the double entry bookkeeping was invented, officially the claim is given to Italian Luca, but India also had our own internal accounting record systems of bookkeeping, but we will not enter into that territory. Though officially world over, now the double entry system of bookkeeping is the most prevalent form of bookkeeping. So, we decided ki theek hai, if I go this way then you will come this way, right? And that is the rule for India. In the US I will go this way and you will come this way. So, it does not matter. So, initially it has been decided ki theek hai, let assets be debit. So, if assets are debit then this must be credit, ulta ho gaya, reverse hai. And so, this part of the rule we have to just remember, everything else follows. Is everyone clear on this part? So, assets are debit, increase in asset is debit and decrease in asset is credit, that is it, and therefore, the rest follows. And the only thing that we have to also consider is, under retained earnings we have both incomes and expenses. Under retained earnings we have both revenues and expenses, right? When you sell something, does it increase your retained earning or does it decrease your retained earning? It increases your retained earning. So, increase in revenue increases retained earnings, right? Increase in expenses, does it increase retained earning or decrease retained earning? Decrease. And if anyone is getting confused, let me go back to class 5. Let's go back to class 5. What was profit? Selling price minus cost price was profit. Increase in selling price will increase profit. So, increase in selling price equivalent is revenues. Increase in selling price will increase earnings, the same as retained earnings. Increase in selling price will increase profits, and increase in costs or expenses will decrease profits. Are you clear? Increase in selling price will increase profits, and increase in cost price or expenses will decrease profits. We all understand that from class 5, and that's all we are saying. That's all we are saying, right? Yesterday we were also doing the T accounts. You remember T accounts? And we said in T accounts we have the debit side, which is the left side, and credit side is on the right side. We all remember that? This part is understood. The other name for debit can be charge. What is the chart of account? Mitali. If I say 24046, you will understand we are talking about you. So, your roll number, if I call your roll number, you will understand, yeah, we are talking about Mitali. So, chart of account is like the roll number of accounts, the various accounts that you have. It is the equivalent. It's called as account number. So, for example, let us say cash will have account number 100, depreciation will have account number 101, accounts receivable will have account number 102, and so on. Just as an example. रोल नंबर में कोई एलोकेशन में, आर यू गेटिंग इट? नथिंग ग्रेट अबाउट एलोकेशन ऑफ रोल नंबर. किसी के कुछ भी आ सकता था, एंड इट डजंट मैटर कि शी कांट से कि 24046 इज समथिंग दैट आई डोंट लाइक, मेरे को 24048 दो, यार क्या फ़र्क पड़ता है. एज लॉन्ग एज यू हैव ए रोल नंबर दैट आइडेंटिफाइज यू, हाउ डज इट मैटर कि क्या है रोल नंबर, राइट? सो दैट्स व्हाट द चार्ट ऑफ अकाउंट इज. इट्स द रोल नंबर और द अकाउंट नंबर ऑफ अकाउंट, द अकाउंट नंबर, राइट? Next. So, how do we record transactions? So, when we record transactions, if you see, what did I say? First do transaction analysis, then pass journal entries, then prepare ledger accounts, then prepare trial balance, then profit and loss account, and then balance sheet, right? So, everyone, let's all prepare everything today. So, the example is initial investor. By the way, this is day 2. So, I am not taking you anywhere else. I am just actually taking you back to day 2. But today we will do everything. It's same example as day 2, but today we will do everything, right? So, initial investment by owners, 4 lakh. You remember the name of the owner was Lopez on day 2. First day it was Sam Doty. Day 2 it was Lopez, right? How much did Lopez contribute? 4 lakhs. So, when we do accounting, will we do accounting for owner or will we do accounting for business? Business. So, when we do accounting, has business received 4 lakh or has he paid 4 lakh? When business has received 4 lakh, has cash gone up or down? Up. And from our previous slide, which you all know, we already know that assets are debit, increase in asset is debit, and decrease in asset is credit. So, when cash goes up, cash account is to be debited or credited? Debited. Are you all clear? Increase in asset is debit, cash going up, cash increased, increase in asset is debit, cash account is to be debited. So, cash account is, we are coming to that in the next slide. And what was the other impact? We already know the accounting equation must balance from day 1 and day 2. I have stopped saying it. What was the other thing? Other thing was equity went up, right? Equity went up how much? Equity, what part of equity? The share capital, the paid in capital, paid up capital, or the share capital. In the US they call it common stock, in India we call it share capital. So, yesterday we have seen the 4 forms: authorized, issued, subscribed, and paid up. So, this is paid up capital, right? How much? 4 lakh, right? And so, let us go to the next slide. So, let us pass the journal entry then. So, what is the form of a journal entry? Everyone, So, do not look, you write it. So, the form of a journal is, first you will have a date for everything you do it systematically. So, you will have a date. So, date, then you will give an entry number, serial number. Entry number is nothing but serial number of the journal entry, right? Serial number to ye pehla hai, this is the first one. What is the account? Cash account we said is to be debited, increase in cash, increase in asset is debit. So, cash account is debited. How much? 4 lakh rupees. And there has to be some other, what was the other impact? The other impact was paid in capital or paid up capital or share capital is credited. How much? 4 lakh. So, this is the format of our journal, right? And we will have a posting reference which we will explain ki what is this posting reference. It is coming up after 3 slides. I will explain what is this posting reference. But let us be clear first, is this part understood by all? Cash, what was the first we did transaction analysis. What was the transaction analysis? Cash increased, share capital increased, both increased by 4 lakhs. This was done by all. Cash increased, increase in asset is debit, cash account is debited. Increase in share capital is credit, share capital account or paid up capital account or paid in capital account is credited. Are you all clear? Is there anyone who has not understood? Is there anyone who is not writing? Everyone must write and everyone must understand, right? If you do not understand, please tell it now, because then we will move to the next step. हाँ बोलो वापस हाँ ठीक है. On day 1, day 2 we have done transaction analysis. When Lopez invests 4 lakh, from business perspective, does cash come in or does cash go out? Cash come in means cash increased. Cash is an asset or cash is a liability? Asset. From our rules, from the rules, we said asset is debit, increase in asset is debit, decrease in asset is credit. You remember that? अभी दिखाया था ना slide. So, cash increased, so cash account is to be debited. Everyone clear? Cash increased, cash is an asset, increase in asset is debit, so cash account is to be debited, right? That part is clear. What was the other impact? Capital, share capital is issued to Lopez. So, share capital is equity, equity is credit, increase in share capital is credit. So, share capital account is credited. Share capital, the other name here is paid up capital or paid in capital, that is what is written. Why? For stock or common stock, in US they call it common stock, they also call it capital stock. So, then this is just the narration. This below the entry is cash account debited 4 lakh, capital account, share capital account or paid up capital account or paid in capital account, whatever you call it, is credited 4 lakh. And this, the last sentence that you see when I was talking yesterday, I said it is a narration, right. So, narration kya hai? Capital stock issued to Lopez. Is everyone clear now? Right? So, let us go back. So, now that we have passed this journal entry, we have to prepare the ledger account for these 2 accounts. We have to prepare the ledger account. So, you remember yesterday I said ledger accounts will be prepared like a T account, right. Ledger account will be prepared like a T account. It will have a debit side and it will have a credit side. It will have a debit side and it will have a credit side. So, how will it look like? Let us say cash account. So, left side is called the debit side, right side is called the credit side, right. So, and same for all other accounts, you just prepare a T, you write debit on left side, credit on the right side and then you name cash account. So, cash account, we will show how to write it properly, but in a summary form we can write cash account and then what was the amount? 4 lakh, cash went up, cash account was debited. On the debit side we write cash 4 lakh. Is everyone clear? Cash account was debited. On the debit side we write cash 4 lakh. Everyone clear? Capital account, and of course we should, what we also write is 2. How we do it is write cash, we will write 2 capital account or paid up capital account or whatever, paid in capital account. How much? 4 lakh. So I just write 4L, 4L for 4 lakh, and in the other account is capital account. So here we write 2, on the credit side we write buy. So here we would have written 2 share capital account, and in paid in capital we will write buy cash, because what is the other part of this? Buy cash, right? So buy cash how much? 4 lakhs. Buy cash how much? 4 lakhs. Are we clear? Anyone not clear? So has everyone understood this, and is every single of one of you writing it? Yes. So okay, let's go to the next slide. So this we have already done. Let's go to the next slide. So loan. So you remember in that day also we said we need 1 more lakh. So we are going to the bank and we tell the bank, please give us a loan of 1 lakh rupees. How much? 1 lakh. We are getting a loan of how much? 1 lakh rupees from the bank. So when bank gives us 1 lakh rupees, does cash go up or down? Up. So cash is an asset or a liability? Asset. Cash is an asset, so cash increase in asset is debit. So cash going up, cash account is debited. We are all clear? So cash account is debited. That's the journal entry that you are passing. What is the liability here? That has gone up. Bank loan. Bank से पैसे ले तो लिए, देने भी तो पड़ेंगे. So it is a liability. It's a money that we owe to an outsider bank, right? So bank loan account is to be credited. The other name for bank loan in US is note payable. The other name for bank loan in US is note payable in the US, but for Indian purposes, don't get confused, call it bank loan, right? Just call it what? Bank loan. So what is the entry that we pass? First we write the date, we give the serial number, entry number, this is just serial number, right? 2. That was the first one. Cash account was debited 1 lakh, and note payable or bank loan is credited. Bank loan and note payable are same. So bank loan or note payable is credited how much? 1 lakh. Is everyone clear on the entry? Cash account debited, increase in cash is an asset, increase in asset is debit. Bank loan is a liability, increase in liability is what? Credit, right? Increase in liability is credit. So bank loan or note payable is credited, and then below that we have a narration. We will talk about this later. We will talk about it after 1 or 2 minutes. What is the narration? We borrowed at 9% interest on a 1-year bank loan. We borrowed at 9% interest on a 1-year bank loan.
So mandatory is narration.
क्या? It is given. It is given. ठीक है. In real life when you solve you don't. ठीक है. But अभी अगले इस weekend तो करो, अगले weekend से बंद कर देंगे. For this weekend give narration because it's a good practice. ठीक है ना? So what was this was the journal entry, and what's the ledger account? Ledger account, ignore this, this is the first one, but cash is again debited in the second one. Cash is again debited in the second one, right? So cash account is debited 1 lakh. Cash account is debited how much? 1 lakh, right? And what was the other account that was credited? Bank loan or note payable, that was credited 1 lakh. Has everyone understood? Is there anyone who has not understood? And is there anyone who is not writing? मैं आ रहा हूँ पीछे. Next, So we go to the third entry. First 2 entries are clear? We acquired equipment, store equipment or equipment for cash. How much? 15,000. How much? 15,000. So when you acquire an equipment, does equipment value? So it's brand new equipment, right? Does equipment go up or does it go down? Is equipment an asset or a liability? Asset. Increase in asset is debit or credit? Debit. Credit किसने बोला? Increase in asset is debit, right? So equipment account is debited. एक मिनट लास्ट पे जाएंगे. And cash will go down. So cash is credited. Is that clear to all? Next. Next. So this is the entry that we are passing. Equipment account is debited 15,000, cash account is credited 15,000. Now let us see how all of this looks in the ledger account. What we were showing till now on screen was the miniature form of ledger account, right? Ekdam the most basic which you are seeing, but you are supposed to write fully, right? Just as I wrote cash debited, cash account debited to capital account 4 lakh, and then capital account by cash 4 lakh, right? That is what you are doing there. On debit side you are writing to, on credit side you are writing by. Is that what you are doing? Right? So, what is the third entry? First we put the date, first we write the date, then we write the serial number, entry number, then we write store equipment account is debited how much? 15,000, and cash account is credited how much? 15,000. Everyone clear on that part? Now, then we write this narration, acquired store equipment for cash, right? And then now let us look at what is this posting reference. So, cash account, see every time we wrote cash, we have written posting reference 100, because cash account was given a roll number of 100. What was the roll number of cash account? 100. What is 100? For human beings we call it a roll number, for accounts we call it account number. The account number of cash was 100. So, under cash you see it is 100. Look at the first two, cash 100, cash 100. So, it is just like I am writing, I ask you, write your name and also your roll number while submitting assignment, so I can cross check. So, this is just cross checking, name cash, roll number 100, it is like that only, right. So, cash 100 is credited. What was the roll number of equipment account? 170. Is everyone clear? What was the roll number of equipment account? 170. What was the roll number of note payable account? 202. What was the roll number of paid in capital account? 300. We all understand that, and it is just a roll number, and for accounts we do not call it roll number, we call it account number, right. So, under cash, so let us prepare the cash account properly. Cash account is prepared properly. So, if you first write roll number, name, roll number, just as you submit your assignments, cash account, roll number is account number 100, account number 100. Then we write date on the, first we will write date, even though I did not say it, but date to must be written in any account, right. जैसे बैंक स्टेटमेंट देखा होगा, डेट वाइज देते हैं, दिस डेट 100 rupees came in, another date 50 rupees went out. That is how you have the bank account statement looks like, right. So, date, first we write the date, then we write, in India we call it, US का slide है, we call it explanation की जाए, you will call it particulars, particulars. So, what we will call particulars, and under cash account we will write, जैसे what I did, to capital account. So, the first thing we will write cash to capital account, and then there is a journal reference, you see it is 1, because it is entry number 1. Entry number 1 is this. For the current entry that we are looking at equipment, cash went down. So, date is this, credit, cash account is credited by equipment not cash, by equipment. So, under cash account we will not write by cash, in cash account we will write by equipment, right. We will write the name of the other account, cash है वो तो मालूम ही है, right. If you tell, if the question is तुम्हारे घर कौन आया था, मतलब मेरे घर में मैं था, अरे तुम्हारे घर में तुम थे is known. Are you getting what I am saying? I am not making fun of you, I am just helping non-BCom understand, right. मेरे घर में मैं था और तुम्हारे घर में तुम थे is known. आया कौन था ये बताओ, right. So, we will write not cash, we will write by equipment, right, by equipment how much? 15,000. And what is this journal reference 3? This is the serial number of the journal entry, journal reference 3. So, then we know कि we can cross check, अगर कोई mistake भी हो जाए, if by mistake it was written as 1500, and if at the end we realize कि अरे ट्रायल बैलेंस नहीं मिल रहा, because in one account you have written 15,000 in store equipment account, and in cash account you have written 1500, so there was a mistake, and then you have to detect. So, then you will have to check it, अच्छा यहाँ पर तो 15,000 था and I have written only 1500. So, this reference, look at this, it is saying serial number 3 of journal, serial number 3 of journal 3, this journal reference number is written here 3. So, are we all clear? But the only thing is, the only difference is we will not write explanation. In India we will write particulars, and in particulars in cash the first will be to capital account 4 lakh and the third is by equipment account 15,000. Is anyone not clear? And so, it is obvious that the third the other ledger account is store equipment accounts is debited to cash 15,000. Is everyone written that? Anyone who has not written? So, this is how the ledger account will look like. This is how the proper, but it is okay. For this weekend, write journal mein, write narration and all. After this weekend, it is okay not to write narrations. But for first weekend, एक बार लिख लो, थोड़ी सी आदत डालो कि this is how it's done. फिर it's okay not to do it, right? For this weekend, write narration and prepare all. So, you will do transaction analysis, you will do journal entries, you will do ledger accounts. By the way, did you notice one thing? We have taken 3 examples till now, just now. Till now, we have asset up, equity up. Second, asset up, liability up. Third, one asset up, another asset down. From our basic accounting equation, assets equal to liabilities plus equity, we already know it that when one asset goes up, either equity has to go up or liability has to go up, or if one asset goes up, then another asset has to go down. Are you getting what I am saying? Yes. So, we have covered all 3 examples of accounting equation. We have covered all 3 examples of accounting equation. What we have not covered is revenues and expenses, right. So, let us go next. एक मिनट, हाँ, back. So, cash account we have already seen. This is, they are saying this is another format, but we will, will a trial balance or not balance? Just asking. It will, and why will it balance? Because debits and credits are equal. For every debit there was a corresponding credit. So, every time we have passed a double entry पर तो हम आए नहीं, हम तो बोल रहे हैं कि debits and credits are equal. So, the sum of all the debits must equal the sum of all the credits, and therefore, the trial balance must balance, right. So, till now we have not touched revenues and expenses. Let us come to revenues and expense. I am just reminding you that revenues and expense we have already seen from the first slide are part of retained earnings. Revenues and expense are part of retained earnings, right, and eventually they will be transferred to retained earnings or profit and loss account. Revenues and expense will eventually get transferred to profit and loss account, right. And we already know this ki revenue increases retained earnings or earnings, increase in selling price increases profit. So, revenue increases retained earnings, and therefore, since it moves in the same direction as retained earnings, therefore, if retained earnings is credit, then revenue is credit. It is moving in the same direction. Expenses move in opposite direction, increase in cost price decreases profit, right. So, expenses decrease retained earnings, they move in, increase in expense decreases retained earnings. So, they move in opposite direction, and therefore, so the point is retained earnings was credit. So, revenues are credit and expenses are debit. Understood? Ulta hai, expenses are ulta, right. So, that is all I am saying. So, now let us do some more entries, but it is same day, day 2 only, but we did the first 3 entries and now we have skipped and come to entry number 10. We have come to entry number 10, right. So, sales on credit is 1,60,000, asset account receivable. So, what has happened? We have sold goods on credit, how much? 1,60,000. How much did we sell? 1,60,000, right. So, is sale leading to increase in retained earnings or decrease in retained earnings? Increase in retained earnings. So, it must be credit, increase in retained earnings is credit. So, revenue is credit. So, revenue account, sales revenue account or sales, we will just call it sales. Sales revenue is sales for short, sales is credit, right. Sales is credit is understood. So, when we sell, we will either sell in cash or on credit. When we sell, either we will receive cash now or in future. When we receive cash now, it is called cash sale. When we receive cash in future, it is called credit sale, right. When we receive cash now, then cash asset is debited. When we receive cash in future, time being we have not received, that person is our debtor, account receivable is debited. What are the names for account receivable? We can call it debtors, sundry debtors, accounts receivable, trade receivable, you can call it by any name, but essentially they are all the same, right. There are some minor differences which will not enter into, right, but for the purpose of this class, we will treat all four as same: debtors, sundry debtors, accounts receivable, trade receivable, right, they are all the same. So, if it was a cash sale, cash as an asset would have gone up, so cash account would be debited, but since it is a credit sale, account receivable is also an asset which has gone up and that account is debited. So, whether it is a cash sale or a credit sale, it does not matter, sales account is always credited. Did you notice that? Sales account is always credited, whether it is a cash sale or it is a credit sale, sales account is always credited. What is debited depends on whether it is a cash sale or a credit sale. If it is a cash sale, cash account is debited. If it is a credit sale, accounts receivable is debited. Are we all clear? So, in this case it was a credit sale, so accounts receivable is debited. हाँ हाँ नहीं समझ में आया क्या? अच्छा, when sale happens, the equivalent of sale is selling price from class 5, right. Increase in selling price increases profit, increase in selling price increases earnings, increase in selling price increases retained earnings, revenues increases retained earnings, retained earnings was credit, increase in retained earnings was credit, sales is therefore credit. That part is clear. Now the question is, I have sold to Vaishnav. When I sell to him, will I sell it free of cost or will I say him कि भैया पैसे दो? When I sell to him, he can either pay me right now or he can pay me in future. Only two options. When he pays me right now, it is called as cash sale. When he says यार पैसे तो नहीं है, मैं कहूँ बाद में दे देना, right? So in business it's common. So he will pay me in future. He says I will pay you after 2 months. I said fine. So in that case, when he pays right now, he gives cash. So I will say increase in cash is debit. That part is also understood. When he gives me cash right now, so why would I sell if I don't get cash? Why would I sell if I don't get cash? Are you getting that point? मैं business किया हूँ तो मेरे को पैसे तो कमाने हैं ना. So if I sell it to him, I want him to pay me cash either now or in future. Is there anyone? Do you want to sell all your? Do you have a laptop? Is it with you? Okay, not right now. But assume this laptop belongs to you. Assume I tell you कि ये laptop मेरे को बेच दो. तो पैसे दो. बोले 50,000 रुपए तो अभी देती हूँ. Are you getting it? So when you sell, you want to get cash. अरे बिना free में कौन देता है इस दुनिया में? Right? You came to IIM. Did they allow you free education? They said fees दो पहले. Right? They were selling a service. They were saying पहले fees दो. Fees क्या था? Cash ही तो दिया है. Right? So when you sell either a product or a service, you expect cash. Cash दो. Either you can say कि हाँ cash है ले लो. Topic closed. In that case, I will say cash sale. That is cash sale. So in that case, I have received cash. Cash is asset. Increase in asset is debit. From our rules, cash account is to be debited. That part is clear. The question is what is happening in credit sale. So the same person He says पैसे नहीं है मेरे पास. So I tell him, okay fine, बाद में दे देना. In business it's common to say pay me after 2 months. So he has agreed to pay me after 2 months, right? So when somebody agrees to pay you in future, he is your debtor. That person is called your debtor, right? So I will say, okay, he didn't give cash now, but he has promised he will give me cash in future. How much? 50,000 rupees, say, right? So this part 50,000, I call him as my debtor. Debtor has various names. So debtor means he will pay me, he is my asset. Debtor means he will pay me cash in future, he is my asset. Asset, debtor is my asset, right? Increase in asset is debit, increase in asset is debit, debtor is debit and increase in debtor is debit. So debtor account, the other name is accounts receivable, is debited. Are we clear? Accounts receivable debited, sales revenue credited. Are you all clear? If it was a cash sale, it would be cash account debited, sales credited, right? Next. So using the same principle, ledger accounts, prepare the ledger accounts. Sales account is credited 1,60,000, accounts receivable is debited 1,60,000. 1,60,000, right? Next, when you sell, you have already accounted for the sales. We have already accounted for the sales. Who will account for the cost? If you want to determine the profit, is selling information sufficient, or do you also need to know the cost price? Selling price minus cost price is profit. At this stage we are only at selling price level, right? So now let us look at the cost price also, right? If we are buying, generally we could have used, the other name could very well have been purchase account. If you are buying a product and selling it, we could have very well called it a purchase account, but let us say for the, at this stage, say it is same as cost of goods sold at this stage. Yeah. So what was the cost of the inventory that we sold? The cost of the inventory that we have sold is how much? 1 lakh from that day, right? So the cost of the inventory that we have sold is how much? 1 lakh. When you sold that inventory, say laptop, I had, let us say, 2 laptops. Has the I had 2 laptops, 50,000 rupees each, say, yeah. Has the stock or inventory gone up or down? When you sell, has your stock or inventory gone up or down? Down. So when you sell, inventory account will be credited. Inventory account will be credited. Are you getting that? When you sell, inventory account, because inventory asset goes down, decrease in asset is credit, inventory account is credited. Also when you sell, we have already taken the selling price, we also need to consider the cost price, right? So what was the cost price? Cost price was, in this case, it is given from day 2. If you look at day 2 example, it is given there that the cost of inventory sold is 1 lakh. So cost of goods sold is 1 lakh. Are we clear on this part? थोड़ा प्रैक्टिस से और ज़्यादा समझ में आ जाएगा. एंड कॉस्ट ऑफ गुड सोल्ड, it could have very well have been purchase account, for example. The other name for cost of goods sold could very well have been purchase account in this case, कि purchase account, right? So this is the entry. Let's look at the ledger account. So ledger account, हाँ, cost of goods sold debit 1 lakh, inventory credit 1 lakh. Clear? Everyone clear na? Next. Yeah, you remember? Likhit. I had come to you to stay in your flat. On 1st of April, I went to Likhit. I said, I will stay in your flat. He said, give me 3 months rent advance. What was the rent? 2,000 rupees per month. What was the rent? 2,000 rupees per month. I paid him 6,000 rupees 3 month rent advance. 6,000 rupees, 2,000 per month. On 1st of April morning, I have given you the money. Your brother calls you and says, I need the flat. You tell me, Arre bhai, vacate karo, my brother wants to live here, you vacate it. I said, I will vacate it, but give me my money first. I will say that. So, the prepaid rent on 1st of April morning, his brother has not yet called. I have given him 6,000 rupees. This is prepaid rent of 3 months. Prepaid rent of 3 months, how much? 6,000 rupees. Prepaid rent account was debited. Are you seeing it? It's an asset. Prepaid rent is an asset. If he says, my brother has just called, he is telling ki main rahunga, so you please vacate. I will tell him, I will vacate. Give me my 6,000 rupees back. Are we clear? So, prepaid rent, he owes that money to me, is on 1st of April morning, after giving 6,000 rupees to him, there is a prepaid rent of 6,000 which is an asset because he has to refund it to me on 1st of April morning. If he asks me to vacate, he has to refund it to me. So, on 1st of April morning, prepaid rent for me is an asset of 6,000. I just paid him cash. Did cash go up or down? Down. Cash is an asset that has gone down. Decrease in asset is credit. So, prepaid rent is debited 6,000 and cash is credited 6,000. Everyone clear on that? 1st of April, I am talking of 1st of April morning. I have not come to end April or 30th of June, right? I have not come to end April or 30th of June. Next. So, that was the entry: prepaid rent debited, cash credited. Prepaid rent, debit side 6,000, cash account, credit side 6,000. Everything else you have to write on your own, right? I am assuming all of you are writing it, right? Let's talk about, now we are on 30th of April evening. Now, Likit, we are on 30th of April evening. Your brother has not yet called, let us say, but now your brother has just called. Okay, I want to stay. Likit's brother has just called him saying, I want to stay. He tells me, you please vacate. What will I tell him? I gave you 6,000 rupees for 3 months. I have only stayed for 1 month. I have not stayed for 2 months. For the 2 months that I have not stayed for, the rent was 4,000 rupees. Please pay my 4,000 rupees. Are you getting it? If you don't pay, I will also not vacate. Then I will stay for all 3 months. So, on 30th of April, 4,000 rupees represents my prepaid expense balance on 30th of April evening. Are you getting what I am saying? And why is that? Because I have consumed rent for 1 month. I have consumed rent for 1 month, right? So, the rent expense for the month of April, from 1st of April morning to 30th of April evening, is my expense. It reduces my equity. So, rent expense is debited. Rent expense is debited how much? 2,000 for the month of April, and prepaid rent is credited because earlier the balance was due to you was 6,000, but that balance has now gone down from 6,000 to 4,000. So, the balance has gone down from 6,000 to 4,000 and decrease in asset is credit. So, prepaid rent is credited. Are we clear? We are all clear on this? Decrease in asset is credit, prepaid rent is credited. Rent expense debited, prepaid rent credited. So, this is the journal entry. Let us go to the next one. And what is the ledger account? Prepaid rent. This was original prepaid rent 6,000 and 2,000 credited, right? And rent expense 2,000 debited. Rent expense debited 2,000, prepaid rent credited 2,000. Rent is an expense, prepaid rent is an asset. Rent is an expense, prepaid rent is an asset. Next. Do you remember we had bought depreciation, and the we had bought the equipment, right? We had bought the equipment for 15,000, and even though we didn't do it today, that day for 1,000 of equipment we had sold also. So, we were left with 14,000 of equipment that day. I am not talking of today. On day 2 we had also sold one thousand of equipment, we were left with 14,000 of equipment, and then we said that day that 14,000 of equipment, the useful life is how much? 140 months, 140 months. So, I said 140 months is the life of the asset, 14,000 is the value total, and we said monthly depreciation is 100 rupees. Do you remember from day 1?
Yes.
So, the monthly depreciation is 100, depreciation expense, we have already done depreciation in intimate details in last 2 or 3 sessions. We prepared the depreciation chart. So, depreciation is an expense, I do not have to explain again. Depreciation expense is debited 100, right. So, the question is what is to be credited. See, there are 2 ways. Are we all clear on depreciation is to be debited?
Yes.
Any questions? Is an expense, increase in expense is debit, depreciation expense is debited. And what is to be credited? There are 2 ways to do it, one way and second way. So, I am just writing short depreciation debit, right. Both the cases depreciation will always be debited for short, right, 100. So, either you can credit when depreciation reduces the value of the store equipment, depreciation reduces the value of the store equipment, which is an asset. So, you can say to store equipment, store equipment, how much? 100, store equipment, right, 100. So, the asset value has gone from 14,000 to 13,900 because of the reduction of 100. Credit, decrease in asset is credit, right. The alternate way to do it would be depreciation debited. It is often considered a good accounting practice not to touch the asset account. In that case, we can have to accumulated depreciation on asset. I am just writing on asset, because just to make it general on. Are you getting what I am saying? To accumulated depreciation on asset. So, instead of debiting or crediting the asset account, you credit an account called accumulated depreciation on asset, which is called as a contra account. And in one case, how will you present this? If you are following the first method, how will you present as store equipment in the balance sheet? You will say store equipment is at 13,900. Why? Why? Because store equipment account had a debit balance of 14,000, credit balance of 100, and balancing figure is 13,900. Are you understanding what I am saying? 14K. And here we will show in the balance sheet store equipment at 13,900. But in this case, what we will do, we are saying let us not touch the asset account. एक बार asset खरीद लिया, उसको ऐसे ही रहने दो, सारा कूड़ा एक साइड में एक डब्बा रख दिया, उसमें डाल देंगे. So, this will be put in the box called accumulated depreciation, which will be reduced. So, we will say store equipment is 14,000, and then we will say less accumulated depreciation 100, balance 13,900. Do you see that essentially this is balance sheet in the first case and this is balance sheet in the second case, and do you see that actually essentially it is the same thing? Are you having any difficulty understanding? Essentially it is the same thing, whether we say depreciation debited and credit store equipment, or we credit accumulated depreciation on store equipment. Everyone clear? Perfect. Next. So, depreciation expense is debited 100 and everyone is writing, right? And is there anyone who is not writing? Accumulated depreciation credit 100, right? Next. I have already explained. So, it is called, in such a case, this is called as a contra account. It is will be shown as a reduction from the asset account. Accumulated depreciation is called as a contra account and it is shown as a reduction from the asset account, as we have just seen here. And this we have already seen using our depreciation charts and tables that you prepared, right? It's the same thing, so nothing new, right? Next. Book value we have, what is the, so do you remember the other day we said we will call it as gross block less accumulated depreciation equal to net block. What was the other name we said? We said the other name is gross fixed assets less accumulated depreciation equal to net fixed assets. And what are some other names? We can call them net book value, carrying amount of assets, carrying value of assets, all mean effectively the same thing. They are all different names. So, people, trial balance, you have already prepared the accounts. Some accounts have debit balance and some accounts have credit balance, right? So, start and how do you prepare the trial balance? This is how you prepare the trial balance. So, trial balance will have one a debit side and one credit side, yeah. So, we will have only broadly, I mean just the simplest form for trial balance, we will have particulars where we will name the assets and liabilities and incomes and expenses and everything, debit, credit. So, everything, so what we will have is, it will list all the assets, right. Let us say asset value is say 100, say. It will list all the liabilities. I am just giving an imaginary. You can prepare your own trial balance if you do not believe me. But do you agree with me that a trial balance will balance by definition? Liability, let us say, is 50 on the credit side. Share capital, I am just writing share capital short, is 50 on the credit side. Let us say income, no, not income, revenues. Revenues on the credit side is how much? 10. And expenses on the debit side is 10. So, the trial balance will look something like this. It will have 5 accounts, 110, 110, and it will balance. Are you getting what I am saying? This is the structure of trial balance. We will call it trial balance as on 31st of July. If we are preparing yesterday's account, we will call it trial balance as on 31st of July. It will only have these 5 things. What are these 5 things? It will have assets, all the assets, it will have liabilities, it will have share capital, it will have revenues, and it will have expenses. These are the 5 types of things that you will see in a trial balance. And even if you do not believe me, prepare your own trial balance. And how do you balance? Yeah, let us see how to balance. I will just give you one example of how to balance, right. We have not yet seen that. So, I have already shown how to balance the store account. If you see, this is how you balance the store account. Debit balance was 14K, 14,000, credit balance was 100, and then we say the difference between the two is 13,900. So, we write 13,900 on this side. It is the same process when you go to a sabji wala. When you go to a sabji wala, what do? You go to a sabji wala. एक साइड में थोड़ी ज़्यादा हो गया तो he will put some weight on that other side so that it balances. Are you getting that? That's what we are doing. इधर 14,000 था, इधर 100 था. So then we say, okay, store account is an asset. So उसका balance carried forward is how much? For difference between the two is 13,900. So we do write 13,900. So it becomes 14,000 on both the sides equal, and then this balance brought forward becomes here this is balance carried forward, yeah. This is balance carried forward, and here to balance brought forward how much? 13,900. So, let us also balance the cash account once, so that we have a better understanding. So, this is how we balance. Are you getting it? Yes, sir. And you may remember it from, so I will balance this and I will also balance, so let us balance the cash account that you had. The first 3 entries cash account. What are the first 3 entries? Cash account, you had 2 capital, 4 lakhs, I am writing 4 lakh short, 2 bank loan, 1 lakh, and buy equipment 15,000. Are we all clear? Is it the same cash account? Does anyone have a different cash account? हाँ ठीक है, एक बार इतना सही कर देते हैं, ठीक है. एक बार से, because we are understanding the balancing process, right? So ठीक है, इतना एक बार समझिए. So if this is the only 3 entry, then how will we balance? We will say, okay, this side is how much? Debit side is 5 lakhs, credit side is 15,000, debit side total 5 lakhs, credit side total 15,000. So what's the difference between the two? 4,85,000. How much? 4,85,000. So we will say, we will give the date 31st of July, for example, by balance carried forward. How much? 4,85,000. And then we will say total of this side now is 5 lakh. Total of this side is 5 lakh. So the two sides are balanced. And here on first of, this was 31st of July, on 1st of August, we will say to balance brought forward. How much? 4,85,000. Are we all clear? So, but you see in our trial balance, we have, so this is how we balance the account. So when we balance the account, you will prepare the trial balance. After balancing, you know how to, अब सिर्फ addition is left only, addition subtraction बच गया है, that you can do on your own. So when you prepare, you will be left in the trial balance with these 5 types of accounts. How many types of accounts? 5 types of accounts. Assets, liabilities and share capital is one. They will go to balance sheet. They will go where? To balance sheet. And revenues and expenses is the other. They will go to profit and loss account, PL account. We already know how to prepare income statement, which is called PL account, and balance sheet, which is this, right? So from trial balance, assets, liabilities and capital will go to balance sheet, and revenues minus expenses will go to PL account. Let's prepare. This is our trial balance. Assets 100, liabilities and capital 50-50, revenues 10, expenses 10. Let's prepare the trial balance, right? So the trial balance is this. Let's prepare, you can see it, right? It's very simple. Let's prepare the PL account and the balance sheet. So PL account, what will go in PL account? We said revenues and expenses will go in PL account, assets, liabilities and share capital will go to balance sheet. So first we prepare the PL account, and in PL account we have revenues on this side, how much? 10. Expenses on this side, how much? 10. Okay, in this case there is no profit, no loss, but we will immediately in next 30 seconds later we will prepare one more example where revenue is 12. Okay? So this part is understood. This is a case of no profit, no loss, but let's go and then let's prepare our balance sheet. Our balance sheet will have assets 100, liabilities 50, share capital 50. Balance sheet is balanced 100, 100. Now let us see, we are at this stage. This is all understood? Anyone who is not? Why? Because we said revenues and expenses will go to PL account, and assets, liabilities and share capital will go to balance sheet, and that's what I have done and prepared it, right? And now what we will do, let us say we are told there is a minor correction needed. At midnight of 31st of July, we had actually made a sale of 2 rupees. When we made a sale of 2 rupees, so revenue has gone up from 10 to 12. Okay? And sale of 2 rupees will either increase cash by 2 rupees or it will increase accounts receivable by 2 rupees. In both the cases, both are assets. So asset will go up from 100 to 102. Are you getting what I am saying? Assets, just look at the blue part. Revenues have gone up from 10 to 12. This is a correction needed. And assets have gone up from 100 to 102, and the trial balance is still balancing. Earlier the total was 110, now it is 112. 110 becomes 112. Trial balance is balanced. Now let's go to our PL account. Revenue is no longer 10, it is 12. So if revenue is 12 and expense is 10, now we have a profit. How much is the profit? 2 rupees. What is this profit called? Retained earnings, right? So now PL account is balanced, 12, and this 2 rupees will, Assets have become how much? From 100 it has become 102. So our balance sheet changes from 100 to 102. So this becomes 102. Liabilities is still 50, share capital is still 50, but retained earnings is 2 and total has gone up from 100 to 102. Have you understood it? So that finishes our preparation of journal entry. So we have done transaction analysis, we have done journal entry, we have done ledger accounts, we have done from that how to prepare the trial balance, and from trial balance how to prepare the profit and loss account and the balance sheet. This part is conceptually, see, I have only shown it at a conceptual level, but that's exactly what it is. All the revenues, and in trial balance you will have 5 types of accounts: assets, liabilities, share capital, revenues and expense accounts. It can be that here I have shown 5, in reality it can be 50, but it will belong to any of these categories only. And then revenues and expenses will go to your PL account, and assets, liabilities and capital will go to balance sheet, and that's how we prepare it, right? Hi, this is Dr. P. Sanjay, and I am a professor at Indian Institute of Management, IIM in Sirmaur. If you like my videos, please feel free to subscribe to my YouTube channel. Thank you.